Hello, good afternoon. It's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Certainly visit the actual website, CFDS.com, for those of you that are not familiar with it, and certainly open an account there. And if you'd like to know more about services and free products, obviously CFDS.com is the place to visit. Okay, folks, a wrap up for end of day market wrap up for the FTSE 100 on the 17th of June 2015. Okay, so the fundamentals as always first. So overnight the Nikkei was more or less flat. The Shanghai and the Hang Seng obviously bounced higher, up almost exceeding 1%. So pretty impressive move there. So therefore the Greek concerns were not shared overnight, or were not certainly basically we're not focused on overnight. The US market certainly ticked higher as well, and we're certainly looking to shake off the Greek woes. We've come into the European markets today, and the situation certainly seems to have gotten worse to a large extent. The rhetoric seems to be increasing rather than decreasing, although having said that, when you start to see so much noise, or start to read so much noise regarding Greece, it generally is an indication of a potential bottom. Okay. Now we also have the FOMC as well. Now with regards to Mrs. Yellen, she has to tread a very a fine line. So it's going to be a very balanced approach. So it's going to be very interesting as to what she has to say. From my understanding, she can't be overtly hawkish. She will be hawkish enough to send the euro lower, and that obviously will be a stimulus effect for the European equities from my perspective. But having said that, it won't be hawkish enough to send the equity markets in the US lower, because to a large extent a potential acceptance of a rate hike means acceptance of growth, and that obviously is something that's keeping the US markets afloat regardless of tapering. So that has to be respected to a large extent, because the economic data has been impressive with regards to the US in terms of its jobs data and so on and so forth. So again, it certainly has a lot of permutations. It's not something that I can discuss in a video, the pros and cons, etc. from a fundamental perspective. The best way of explaining it is that the US markets certainly seem to be favouring or preferring or appreciating or accepting a strong dollar policy, and that obviously is good for your US equities at present, because the game being played at present, previously it was the dollar game, i.e. dollar lower and equity markets higher because of the inverse relationship with regards to QE. Then the baton was passed on in terms of QE to Japan, so therefore JPY lower, global markets higher, USD JPY higher, Euro JPY higher, and obviously equity markets higher. Now the game has been passed on to, or the baton has been passed on to the ECB, European Central Bank. So therefore, it's given the fact that the euro obviously has remained stubborn at 1.12, regardless of this talk of Brexit and so on and so forth, just shows you that a risk-off scenario means a higher euro. So there's an inverse relationship now. So the euro, like the CHF, like the dollar, like the yen, historically, obviously, we all know they were considered to be safe haven currencies, i.e. a risk-off currency, and that obviously no longer became the case when the QE project started, and that's exactly what's happening right now. Okay, so given the fact that you have risk-off and so on and so forth in the eurozone, and the yields rising, and potential debt and default and so on and so forth, and all this rhetoric on both sides of the equation, obviously with the US Secretary Mr. Liu now involved as well, the White House obviously intervening, as the latest headlines state, this should technically send the dollar higher, and the euro obviously should collapse, and that's obviously not been the case because of the inverse relationship between the euro and equity. So if equities are lower, euro will have to be higher. That's just the way it goes. Okay, so a hawkish Yellen isn't necessarily negative for the market, so bear that in mind, because it's all about the QE trade, and that's where all the Kool-Aid is going. Okay, right. So the situation from Asia or China, obviously higher. That is, from my perspective, is bullish. Okay, so I interpret that as being bullish, especially for the FTSE 100. We also had an uptick in the price of oil. So Brent and oil did actually initially move higher, as you can see, before we had a crashing or reversal quite powerfully on the oil data that came out. So and copper obviously did bounce to a certain extent before obviously it started to reverse. We did get Japanese data or GDP numbers out overnight that weren't exactly fantastic, but that's another story, and I'll certainly discuss that later on. Okay, so the oil price, again, as you can see here, I mean, we had one hell of a obviously a reversal, almost $2 or $2.50 reversal, but we did hit the high there of 61. That's when the FTSE obviously managed to climb, okay, before it obviously reversed quite sharply. Okay, now the fundamentals or economic news flow that came out today, we had the EU trade balance or Italian trade balance. Nothing, not very important, to be honest. We're not market moving. From our perspective, the actual UK data, should I say, the UK data from a Reuters interpretation and journalist perspective, overall average weekly earnings in the 3 months to April, including bonuses, rose by 2.7% compared to the 2.3% in the same period earlier. Excluding bonuses, pay picked up similar. So given the fact that inflation remains contained and obviously the wage growth is certainly there, that obviously will translate, given the fact that 70% of obviously GDP is based on consumption, therefore a higher disposable income is obviously bullish for the economy, so therefore it's bullish for the FTSE 100. Regardless of talk of rate hikes and so on and so forth, yes, I do respect rate hike talk, but given the fact that inflation is so low, regardless of wage growth, I can't see them pulling the trigger. Now, we did have Mr. Leidy tweet with regards to BOE's Forbes sees BOE rate increase not in not too distant future. Again, they certainly seem to be talking it up. The sterling obviously did rally today to a large extent, given the fact that he's anticipating a potential rate rise, but sterling itself is doing the job. And this is according to another analyst today. That was quite an important comment, i.e. a sterling rally or sterling move higher in and of itself is a rate rise. Now, given the fact that sterling is now coming up to resistance, that's obviously going to be bullish for the FTSE 100. So expect a potential reversal higher on the FTSE and a reversal lower on sterling as well. This is going to be very interesting. Okay, right. So now let's go to the technicals. Given the fact that we've covered the actual fundamentals now, so the FTSE 100. Let's start with a weekly chart, as always. Let's look at the larger bird's eye view. Then we'll certainly look at the go into the micro view. So the weekly chart, at present, we are into previous resistance equals support. So that certainly needs to be focused upon. Now, if you take the fib low here, this is going to be quite interesting. So just take the fib low here, take it to the fib high. Okay, and we are into the 50% fib, so that certainly needs to be taken into consideration as well. Now, the daily chart. Okay, now the euro certainly seems to be collapsing as I speak with regards to the situation with regards to Miss Yellen, so I'll be quick because I need to focus on the FOMC. Okay, so previous resistance equals support around this 650 region, so again this certainly seems to be an area of importance, okay, on the daily chart. And given the fact that you have a falling contracting wedge pattern, it is considered or is interpreted as being being bullish. Okay, now you have an inverted head and shoulders formation. We're just about holding the 75% fib. Any lower than this move below 6670, etc., then obviously that's out the equation, and you have double bottom support at 6650, 6660. For my interpretation and my understanding, we should certainly expect to hold that and start to thrust higher, given the fact that we've broken out the bearish wedge formation. Okay. Now the 10-minute chart, again, though, bear in mind, Greece certainly remains a wild card, so it's all up to Greece. Okay. So Miss Fed now looking for 2 rate hikes in 2015. Fed forecast implied 2 quarter-point rate hikes this year. Okay, let's just have a look at this. FOMC 4th meeting in a row with a decision that is unanimous. Fed now looking for 2 rate hikes in 2015. Forecasts imply 2 quarter rate increases this year. Okay, so that should technically be bullish or strong for the. Bear with me. Right, okie dokie. This should be very, very interesting going forward. Okay. Let's see. So the news flow that's coming out at present. Fed officials again slash 2015 growth forecast 18.82%. April 2.3 to 3%. Okay, let's see what's happening. Go interpretation here. Okay. Bear with me, just need to trade this FOMC meeting. I've actually certainly seems to be exactly what I was expecting, so this should be very interesting going forward. So I do expect the euro to collapse here, given the fact that so far what I'm reading is everything certainly seems to be in line. Okay, let's continue. Okay, let's continue with the video. Okay, so let's see what happens here. Okay, so the FTSE 100, the 10-minute chart on the FTSE 100, we had this key trend line, but obviously that hasn't been respected from a technical point of view. So your pivot low or pivot low for support is going to be in the region of 6660, 6650. Now we do need that to hold. If that holds, then we certainly have the obviously that's in cash market hours, so bear that in mind, folks, not the futures. The futures have fallen as low as 6660, so that certainly would obviously take that out of the equation. I only trade based on cash market hours only, okay, because the futures can be manipulated and adjusted in either direction. So okay, so with regards to the understanding here, you have a inverted head and shoulders formation now set up based on the intraday price action. Okay, so provided we hold this right shoulder, okay, so provided we hold the right shoulder, you have the pivot low at 6665, you have the neckline at 6715, so you're looking at a 40-point move, 50-point move, and therefore you're projecting that up to 6780, 6790, which I'll explain that does obviously come in line with a potential gap level as well. Okay, so this is a situation that we find ourselves in. So you have an inverted head and shoulders formation on a 10-minute chart. You have this zone of support around the 6660, 6650. Well, ideally it's 6660, 6658. So therefore, if we hold the pivot low, or if we can potentially make a higher low here, which I'm expecting, by the way, given the fact that oil prices did reverse quite powerfully, so therefore obviously it sent the markets lower, but we should start to see a move in the opposite direction very soon. Okay, so inverted head and shoulders formation here, and you're looking for a move higher to 6780, 6800 region. Okay, now I did expect the actual inverted head and shoulders formation to play out today, but obviously as you can see, the right shoulder on the 60-minute chart has certainly fallen quite substantially. So given the fact that we did have an intraday double bottom here, if you go to your 60-minute chart, you did have this support zone here as well. Bear with me, allow this to load up, and should give you an insight. So yes, I was expecting this right shoulder here, then obviously a thrust higher, but the market obviously put in almost more than a 75% retracement, almost went down to double bottom, so therefore it's a weak right shoulder. But the 10-minute chart certainly shows that, given the fact that we have broken out the bearish channel, so therefore one would presume or come to a conclusion that obviously that is going to be bullish. Okay, now the actual all share. Okay, now this is an interesting chart, because the FTSE all share now is into 200 MA support, so that certainly needs to be respected, and therefore that would argue for a bounce in the FTSE 100. Now the weekly chart of the FTSE 250 is a concern, and given the fact that it's broken out of the bullish channel, but given the fact that the actual sterling has come to a resistance zone, that should provide support. Also given the fact that we did hold a pivot low from yesterday, so therefore that's certainly a bullish sign from my perspective, and given the fact that the markets did come under pressure, but not sufficient enough to take out yesterday's pivot low, so therefore I would interpret that as being bullish. So again, that's going to be an interesting scenario going forward. Now a lot does depend upon the S&P 500 as well, the movements overnight. So again, that's the reason why I don't focus on the charts overnight, because it's more to do with US markets, and obviously the futures will adjust accordingly. Now the actual volatility index, that's another chart that I would like to share with you with regards to the FTSE, which indicates to me that the FTSE 100 is obviously coming into a key support, given the fact that it actually held yesterday, and we did put in another bearish candle today. So therefore you are looking for a potential move lower on the volatility index, which obviously would imply that you are looking for a move higher on the FTSE 100. Okay, folks, I think that's a wrap. Bear that in mind. Wage growth strong, unemployment obviously remains stable. Employment certainly is looking good. Also there was some bullish news with regards to foreign direct investment with regards to the UK, which again is positive news. This is something that I generally tend to do. I tend to copy and paste all the key market moving articles. If I can just share this one here, Cameron Hale's record £1 trillion foreign direct investment. So again, bullish news overall, and also with regards to pay rises. Obviously, is higher disposable income. Higher disposable income is perceived or understood and interpreted as being bullish from my perspective, based on my understanding of fundamentals via my economics degree. Okay, folks, risk on, risk off, wax on, wax off. Goodbye.